Hi guys, Diederik Klopper here, host of the Voices in Payments podcast, Season 2, in which we'll talk all about the A, B, C, D of payments. Throughout this season, I will be inviting payment experts to talk about artificial intelligence, blockchain, cloud and data, and how these apply, overlap and drive winning business strategies in current-day fintechs. In Season 2, I'm joined by directors, VPs and other senior payment experts who oversee these business operations. But even more often, I'm joined by C-level executives, partners and founders who have leveraged these technologies to generate immense growth. In today's episode, our guest is a specialist in the global acquiring and complex payment acceptance setups. He's a technology hunter and an e-commerce enabler. I'm talking about Rodney Bain, the founder and chief strategy officer at Apexx. Apexx is a payment orchestration layer combining the world's acquirers, PSPs and alternative payment methods into one single integration. They work with enterprise tier 1 customers to consolidate their global payment service providers relationships and display all the reporting and transactional data in a single interface. Throughout this episode, we will discuss the challenges imposed on acquiring banks as a result of globalization, selecting the right acquirer and displaying transactional data in a single interface. There's a lot to unpack here, so let's get right into it. Hi everybody and welcome to the PaymentGenes podcast series Voices in Payments, and welcome to Season 2, where we talk all about the A, B, C, D of payments. And today I have Rodney Bain with me, the founder and chief strategy officer of Apexx Global. Rodney, a warm welcome to the show.
Thank you very much, Diederik. Appreciate it.
Good to have you. Hey Rodney, first of all, how are you doing?
I'm doing great.
We're happy to have you here on the show. And you know that the official first question when I really start the podcast is always the same. I never met anybody who woke up one day and said, I'm going to be a payment expert. You've already had some years of payment under the belt. How did you stumble into payments?
Well, look, I agree with you. Everyone stumbles into it. You know, I don't think it's the sexiest career out there to by yourself.
Well, not on the face of it, but don't you judge a book by its cover, right?
Yeah, once you get a taste of it, you know, it's hard to get out. So yeah, I kind of fell into the industry when I met one of the founders of Yo-Yo Wallet by complete chance. I don't know if you heard of those guys, but it was at the time, 8 years ago or so, 9 years ago, was using your phone to pay in store. And that concept was just miles ahead of what Apple or Google are doing these days. But it sounded so cool. I chased him down over and over until eventually he gave me a job. So I got a taste I was one of the first employees at Yo-Yo Wallet here in London. And then in their kind of BD team, spent a few years there, then moved over to Deutsche Bank. Their payment arm, Evo Payments. So, they represented a lot of different banks, but I worked back and forth from Cologne all the time. A lot of people in payments are used to having to
traveling
a lot. Yeah, so that was a big one. But obviously, Evo's better known for its acquiring in the States. But I was primarily focusing on European enterprise merchants and partnerships.
Yeah, I know Evo quite well because I've worked with them as well while I was doing the recruitment side in Germany. So, and indeed, Cologne was always a hassle to get people who are not living in the vicinity to either travel or relocate. So,
yeah, I mean, a good connection hub, but there's so many conferences going on there. If you didn't get lucky, plan ahead with hotels, you might end up being somewhere pretty uncomfortable.
Exactly. Hey, and then after Evo, you founded Apexx Global. What was it that you were missing in the market that you said, hey, listen, guys, I can either do this that nobody else is doing or I can do it better?
I like to believe a bit of both is what I went for on that. No, look, I think there was, I think I was looking at gateways and what their functionalities were and what they meant to acquirers. And a lot of acquirers were white labeling the likes of PayOn and were building their own proposition, and it was very cards based at the time, and then there was this rise of Adyen, and this is Adyen in many ways prior to their own acquiring platform, and they were just gobbling up business because they, in my opinion, they did a couple things. They built a modern gateway, they had high capacity, with great technology, and they really went down the APM route or LPM, however you want to refer to it. And I think a lot of merchants responded very well to that. So I found we were competing with the likes of businesses like Adyen who were taking more of an ambitious approach to working with alternative payment methods.
Yep.
I was hearing the same thing from my merchants at Evo, who were saying, we want to be able to offer these different products. We want to offer different fraud solutions. We need to understand how the FX works in all this. There's no real clarity. Like there's no transparency, going on here. So I was like, okay, I'm hearing a few things. I'm hearing, connectivity is a huge problem, and it's only getting bigger as businesses became more and more international. I was looking at the big acquirers, and I wasn't seeing any of them reacting fast enough, in my opinion, to that change and that globalization, let's say, of e-commerce. And ultimately, there's that lack of transparency, that the opaque nature of how an acquiring bank works with a merchant. It's just not clear, how the reporting works, the analytics.
Yeah. And how do you think that comes? One theory that I have is that acquiring became more complex as merchants grew more international, and the service offering as well diversified. So were the platforms just not suited to give clarity, or was it a lack of willingness to provide the clarity? Or
I think there's probably a bit of both. I think a lot of the acquiring banks have taken advantage over, implying that, especially this is going back 5, 6, 7 years, implying that FX is what it is. That is just the cost, and you're a UK merchant, you have to use a UK acquiring bank. When they could have had entities in other areas where they could have capitalized on. So it wasn't in their benefit, let's say, to educate merchants on these I guess more efficient ways of processing. I also think that, of course, for an acquiring bank to set up in other regions is no small feat. It's expensive. Whether you do it through acquisition or you set it up yourself, it's a very expensive thing to do. Capital requirements are extraordinarily high. The schemes make it very difficult, and it takes a long time to actually get the licensing that you need. So what I found was a lot of, and I still think this is true today, a lot of the best acquiring banks are the ones who have remained domestic. And as you say, it's gotten more complex, but merchants also have higher expectations from their acquiring banks, especially from an acceptance standpoint. So if you're able to tell them, look, use the best in each market, and now I've got a platform I can provide you that seamlessly makes it seem like, you might have to be working with a dozen acquirers, but it walks, talks, feels like you're working with one. That was one of our kind of initial ambitions.
Yeah, it is very funny because we do quite a few vendor selections for large merchants, and the common thing is that they all prefer to have just one or two PSPs, acquirers to collaborate with in order to make it indeed a simple flow of information. But there are solutions out there who can give you the extra benefits of having local acquiring and one funnel of information. One of which is Apexx. So how did you start in building this?
It was painful.
Well, first you start with the idea, right? And it wasn't just you. So how do you collect the right people around you?
Yeah, so it did actually start just me. I had a colleague at Evo who was tempted to kind of make the move with me, but he'd just become a father and went, this is a high risk for me to be doing. So look, I'm gonna have to leave you to try and do this thing on your own. I did find some people to help me. I put an individual to help me on the technical front. But really, like you say, I had to have a business plan. I had to pull things together. I had to understand if there was going to be a product market fit or not. So there was probably a good 6 months there where I was just by myself trying to work things out, out of my bedroom. I'd obviously spent a lot of time at Evo thinking that, these are some of the problems that we could be solving. But ultimately got to the point where I had this massive issue where I knew that optimizing payments, it would only really add the most value to the largest customers, the ones who really care about every basis point, because when you're turning over billions, a basis point of millions, right? It's a huge impact on them. And they're sophisticated enough to understand that, whilst it's easier to have one or two PSPs to work with, it's not optimized from a cost perspective, from an acceptance perspective. even from a competition perspective, keeping these guys competing with each other, not to, on how they're servicing you and everything is critical. So anyway, I had this big challenge where I got this great idea. I want to be able to integrate to multiple big banks, and I went to all of them. I went to World Pay, I went to Evo, I went to all the major European banks anyway to start with. And they said, look, yeah, conceptually, no problem with what you're trying to do. Of course, if you can bring us some merchants, that's great. But where are the merchants? And is your platform
chicken and egg?
It's a chicken and egg, exactly.
Yeah.
So I guess, how did I start it? I realized that they weren't going to work with some kid that didn't have a bunch of merchants. I was 25 at the time, so I obviously didn't have as much experience as I have now in the industry. But I also lacked merchants. So what I did is I started partnering up with payment consultancy groups, not unlike yourselves, let's say, yep. To help us get a few larger clients interested, who would then facilitate. I guess I'd sit with them to communicate with the acquiring banks, who then said, okay, if you're bringing this customer, they'll sit at a table with us.
So they signed a letter of intent, and that really got you a firm foot in the door.
Yeah, so it wasn't like, for us, like, we didn't necessarily do the build it and they'll come. It was more, let's find the customers that fit the profile of what we want to do. Yep. Let's do our best to really understand their requirements and to build something that's so much better. We always say, if you can build something better, it has to be 10x better than what they have today. Yep. So that's what we went for with a few key clients, and that's what helped us kind of kick off the business with a few of the APMs and acquirers.
Yeah, and then tell a bit more about the solution that you bring. So basically, you're a one-stop shop where you, as a merchant, you can connect different acquirers and have one overview. What are the main benefits for the merchant if there are merchants listening who don't have that knowledge?
Yeah, well,
we need to educate as well a bit.
Yeah, for sure. So I think a lot of people call us a one-stop shop or a marketplace for payments, and I think that's where I was referring to the connectivity piece before. We offer integrations as a service. Skipping ahead in time, just to talk about, I guess, what we do from a proposition standpoint at its core. We've got probably over 160 acquiring banks we can access around the world, over 120 alternative payment methods. We've got buy now, pay later solutions that we can go into later, but we're looking to have about 16 of those integrated by the end of this year. That proposition is something we're really focusing on, and also a variety of different fraud solutions. So we are truly independent. I think that is one of the most unique things about Apexx is yep. We aren't here to have a specific alliance with a specific bank or payment method or anything. It's what is the best suited solution for you as a merchant, and wherever that's unclear, we provide, I guess, enhanced data and analytics to be able to understand the performance of each of your providers against each other, so that you can then continue to make educated decisions. I think a large portion of what Apexx is trying to achieve, and the difference between being a gateway, which we are, which gives all that connectivity, it centralizes everything, all the reporting, all the reconciliation, we integrate the back end piece as well, so it's all standardized. Again, that kind of like walks and talks like it's a single platform. It's the difference between that and a payment orchestration layer, which is what we are, is the performance analysis. It's, can you quickly A/B test, a particular APM in a given market, let's say, and see if it's successful or not. If you're being pitched to by the top 5 acquirers, they've all got great sales guys who come in.
Yep.
There's
nothing they can't do.
There's nothing they can't do, and you're our most important client in the world, and our performance is phenomenal, and our account management and our acceptance levels, they're all fantastic. How does a merchant actually make the decision on who they should be working with? And why would they go through that cost and all the time to integrate to one, when they have the option to integrate with multiple and actually and test their performance against each other? And that's just talking about cards. This applies to all payment methods. Yeah. I think that's kind of what makes us unique in the market.
And then being able to analyze all the different acquirers, how they compete to each other. That is a huge benefit for the merchant. But as well, I can imagine that you were running into a few acquirers who perhaps knew that they would lose out on the competition. That you see a lot of resistance for them to link up with you, because then they can be really easily compared to their main competitors, and that perhaps will lead to a shift in volume to one way or the other.
Yeah, I mean, you're certainly right. Once we show merchants the performance of acquirers against one another, naturally the next thing we do, and we have very advanced tools for this, is the ability to route on basically any criteria that you could possibly imagine. Time of the day, ATV, acquirer, the card bin, whatever it is that you're looking to route on in real time, you can make those changes to adapt. And ultimately, AI will drive a lot of this for the smaller merchants. Have I seen some resistance? Yes. There are some who will, in the same sentence, say they get the best acceptance rates in any given country, but no, actually, we don't really want you working with this customer. Yeah. But look, and it's fair. It's a fair challenge that we receive. But I think that the hand that takes away is also the hand that gives. So I think a lot of merchants that are operating outside, they would never have won, they would have never targeted, the chance to win, because we're helping educate them and show them what they could be doing.
Yeah, and on your platform you mentioned 160 acquirers, 120 APMs, and 16 buy now pay later solutions that are coming onto the platform. Do you see what's the average number of acquirers that merchants are working with? Is there a baseline for that? Do you see it increasing over time the longer they're with you, or?
I'll reiterate, we remain with our initial focus on enterprise clients, which is a term that's tossed around and means different things to different different businesses. But our real sweet spot is a super international business processing 500 million, €1 billion, let's say, and above. That's where we add the most value. But increasingly, as we make our routing tools and the analytics tools, I guess a lot more user-friendly, a lot less manual, a lot more plug and play, to kind of continue on that theme. We're seeing customers that are kind of below that really start to see the benefit in our platform. So to answer your question, there is a range. I'd say that we almost always insist on I'd say insist, but we strongly
advise
that a merchant has at least 2 acquirers, whether that just be for resiliency, acquiring platforms go down, or even buy now pay laters. If you're a big solution and you've got just Klarna, and it represents 20% of your checkout. If they go down, do you have any other backup in that position?
And not even only if they go down, you don't want to be too dependent on one provider, because then they can turn on the screws and
Exactly. So that's what I was saying about that competition piece. So there's a lot of invisible value in having PSPs and payment methods competing with one another with the same merchants. I think overall the merchant gets a better experience, and that's what we're all about.
Yeah. But then you were shortly. Sorry,
at the other end of the spectrum, we work with. I think some of the customers we're allowed to announce is Avon Cosmetics, for example, and I think we're launching in 32 countries with them, and don't quote me on that exactly, but it's roughly like that. And because they have domestic entities in every market, that's circa 32 acquiring banks and payment methods in each one that we're operating with them. And a lot of providers just won't do that. They won't go that far to support a business that international. And I can't stress the reconciliation piece enough. There are not that many enterprise gateways that are willing to have a lot of integrations that are willing to make that extra effort to integrate the back end as well.
Yeah, because there as well is a huge challenge, because of course the data insights that these PSPs and acquirers will give to the merchant, they differ. First of all, they differ in terminology, in way that the data is delivered to the merchant. So how do you reconcile that all into one aggregated funnel? Sounds like a nightmare, to be honest.
It is a nightmare, but that's our job, right? That's what we need to be able to handle. So I mean, we have very complex ways that we've worked through to make it simple and make it standardized. A lot of that process is driven by really what the requirements are from that merchant. How much data do you really need to see from a reconciliation standpoint? Because that's more just can we reconcile the transactions against whatever systems we're using for that piece. I'd say it gets a lot more complicated on the payment acceptance and reporting side of things, where you get a variety of different error codes that don't match up. You've got bins
that can be aggregated into smaller categories or.
Exactly, and schemes have their standards, but then Visa, Mastercard have different standards, and you add carte bancaire, and then you add Card, and then you add RuPay, and you start going right. So Apexx has created our own standards for how we map error codes and decline reason codes, and ultimately the merchant has the choice to just see ours to get an understanding of how we show these types of declines. But we also send in the same message, the original decline reason code, so they can
link it back to the original language.
If they want to, they can see that piece as well. But I mean, there's so many tiny details that have to be considered. I think even if a transaction has cascaded, do you count it as one or do you count it as two? Who's doing that? Are you reporting on all of those? Or are you using multiple banks in the background and being transparent about that? Yeah. The time of the day that an American business is working with a European arm, that day crosses over. So is it still T+1 or is it transaction +2 now? So we've had to really standardize things to make sure that they operate globally.
Yeah, and in reconciliation, like I mentioned, the data is in different types, different languages, different codes. But as well, I can imagine that some acquirers perhaps don't offer data that others do. So then how can you map that across each other? And is there a way to retrieve the data if it's on first phase nowhere to be found?
Unfortunately, at the moment, and I'd say we have some ideas in the future, we're limited to what we can get from the acquirer, but again, because the volume that we process and the size of these clients, we have some influence over requesting additional data. I think the only challenge I have is that the acquiring banks, and this is obviously talking about cards more than anything else, but are more inclined to provide this data, which they have to by law, to the merchant, but they don't technically have to give it to me. So I end up having to do a process where it goes through the merchant and to me, and then back into our dashboards and reporting. So it can be a bit obnoxious, let's say, but we get there in the end.
Yeah, and I can as well imagine that if you've done this a few times upon acquirer, then the fourth or the fifth time it becomes easier because you can get, guys, are we going through this process again, or are we just going to make it work?
Can we just crack on and make it? Exactly. So once we've done it once, it tends to work well. But we've created matrices that help merchants decide who they should even be going out to RFP for across all payment methods, across all acquirers, so that they can kind of shortlist who they want to work with. And it's not just acceptance. We measure these guys based on how rich is the data that you're going to give back to me, how clear is your reporting.
Pricing is part, tokenization, licensing, etc.
Exactly. Yeah. How quickly do you react? How does your tech stack work? Is it your acquiring platform, or are you white labeling one? What's your relationship with the schemes? How do you what's your expansion plans? A lot of these you need to know what the partner's doing in order to understand if they're going to be a good fit for that merchant.
Yeah, actually, what we've seen as well with quite a few RFPs that we've done, amongst others in India, that there's quite a discrepancy between what one acquirer says is possible within the restrictions of the RBI and another one. So there's they need to be knowledgeable as well on what they can provide or cannot provide.
Yeah, it's. I mean, that's one of many tricky markets. I think
it's got its challenges.
It's got its challenges, and I think the traditional schemes, the EMV codes, let's say Visa, Mastercard in particular, focus so much on having a global network, of course, but on supporting their acquirers in the US and Europe, that's where predominantly the volume has come from initially. But there's been huge shifts now, even with other schemes like the ones we've mentioned, like RuPay and the Card or China Union Pay, obviously now being huge. So keeping up with those complexities is something that if you're an acquirer that is focusing on one market, you're not incentivized to help your merchants in other areas. So the way we kind of position ourselves is like, see us as an extension of your payment team. If there's a particular, bit of information that you're looking for, some data, some, should we be doing this? Should we not? Can you go check out this weird and wonderful country? Can you help us find a way of expatriating funds from any given market in, let's say, Brazil or something, where it can be quite tricky to do that? We go away and we find solutions for that. So there's both kind of from a consultative standpoint, but also from a product standpoint. We've got a big brand we're working with at the moment who has a very high transaction value, and they were like, we need pay by link, and this is the only way it's going to work. It's the only way it's going to go here. We said, all right, pay by link. We kind of scoped it out and built it within a month and delivered it to them. And if we can keep doing that as a business, just keep making sure that keep ensuring even that we're providing the best service for our clients globally. I think we have a really winning strategy.
Yeah, and I think indeed the type of platform that the Apexx is offering is so interesting, especially as well for companies that are growing at an expansion rate across different countries. We're now working together with a merchant that is growing 100% year on year. A lot of recurring payments, ATV of about €250, but in a lot of niche markets where PayPal is one of the only ones who's got a solid proposition for recurring payments, but then you pay a 5% fee on the charge. So that's real significant if you're processing a lot. So
yeah, well, I mean, you'd like to believe you get what you pay for, but sometimes it's all that's available. Sometimes that just is the case. And I think there's a huge rise in fintechs that are trying to solve these problems in niche areas.
Yeah, and it's really difficult for a merchant to find out what is the best payment strategy for those countries, because that's not your expertise, right? You're working hard to upgrade your product, to upgrade your service, and then you also have to think about all of this. It's a lot of effort needed.
It's a lot of effort, and for anybody like myself, like yourself, who get the sound there, has fallen into the payments industry. We know how hard it is to try and get your head around how all this works, and it's only gotten complicated over time.
Yeah. You already shortly mentioned AI will play a more active role in analyzing the payment performance, acceptance rates, auth rates, etc. How key is this to the developments that are currently going on within Apexx?
I mean, it's pretty critical. We're in to the extent that we've recently launched replatformed, which again we can go into that. Companies replatforming is such a nightmare for merchants. But we've ripped off that band-aid, so to speak, and ensured that our technology stack is prepared to use AI in a variety of different ways. Obviously, its probably most mature use is within fraud detection, and we have our own fraud detection capabilities internally, but we're not. There's enough companies out there who are investing a huge amount of money into really understanding fraud and using AI in that capacity. So I'd say that's not really where we're focused on it. Where we are focused on this is, going after smaller merchants. Let's say you're a 50 million turnover a year merchant, which would be for us, relatively small merchant. You're processing in a few countries, and it's, they go, hey Rodney, I just want you to just take over. You choose the payment methods, optimize it for me, make it happen. That's when we start going, all right, AI. It's, plug in, start looking at the decline, start looking at patterns.
It's too small to have the manual power doing the work, but if you have enough of those merchants, you can really use the data insights that it gives you and the scalability that AI will give you.
Well, the AI, we'll still have the data from our other merchants to be able to inform and educate the AI or the ML piece. But I think the customers that want it the most are actually going to be the smaller ones. The biggest companies are starting to talk about building their own internal payment orchestration layers, and obviously I find that frustrating, but in many ways, I think they'll realize how difficult it is and then ultimately come around and say, all right.
Well, I can put you at ease that I've seen a lot of efforts and not a lot of results yet.
That's promising for us. But I mean, it's it's great to I think we feel I certainly do feel vindicated in this concept, and where the direction of the industry's gone, and now we're far from the only payment orchestration layer out there. There's now a couple dozen that are popping up all over the place, with shades of gray on what they consider a payment orchestration layer to be. But ultimately, I think merchants taking control over their transactions to better improve their acceptance and cost is critical. But as I was saying, AI feeds well into the smaller merchant base. But the multi-billion turnover businesses want the control. They feel they have the knowledge internally. So I see them, preferring to use our tools and working with our teams to make those decisions together rather than letting an AI system drive that themselves.
Yeah, exactly. I could imagine. And then if we're looking at the ABCD, right? So we certainly spoke about AI. Then blockchain, is this a key focus for you guys, or not yet? Or do you see any potential in the future, perhaps?
Blockchain, I presume we're going to be talking about primarily crypto.
I would be interested in discussing it in a broader sense, because I think that indeed crypto is a very clear example of a solution that blockchain could work for. But I think there are multiple ways that it can be implemented that are not really mentioned yet. But as well, it's hard for me to really put a timestamp on it when that will materialize. And I think it's more 5 or 10 years down the line than a practical 2 to 3 years where we can really say something which is, really holds true.
Yeah, okay. So I understand where you're coming from. The applications for the technology, much like AI, could apply to any industry and probably will. That as you say, it's just a matter of time until it's used as a decentralized ledger, for legal tech, for payments, for whatever it is. It already is being used in many capacities. Obviously, it is quite exciting and interesting that in many ways it kicked off because of payments, and that industry. And you could argue, so did the payments is almost driven e-commerce, and the whole concept, everything's driven by payments. You can't get a merchant account somewhere and take payments. That seems kind of crazy, and that's how Stripe kind of solved. Where do I think it's going? When do I think it's getting there? I'll focus more on the crypto side. I think it's super interesting. It's still used as much more of an asset or a commodity than it is as a payment method. I think that there's some. I think that there are some players who are using it outside of that space for consumers to make transactions. Obviously, with
but on limited scale and with limited efficiency.
On limited scale, and typically within, let's say, higher risk businesses, just to be gentle about it.
Digital entertainment.
Digital entertainment, let's call it that. A bit of gambling in there too, all that stuff, all that jazz. But I mean, what does it represent? It's a network that operates globally. It can be completely confirmed. It doesn't have the security, of course, that you get from cards, where you can charge back or you can get refunds and you can manage the transaction. Once it's gone, it's gone. You don't necessarily get it back. But it is truly global, which is an impressive challenge to what took Visa and MasterCard decades to build the network.
Yeah, I think it's super interesting. There's so much potential, but for me, I can't see it really becoming something that I would invest in myself unless it becomes more stable. And for me, that will mean that it will need to be globally accepted as a payment method, or at least in some volume that you can use it as a payment method. And until that moment's there, the price will be extremely volatile, I think. But I think that will be the catalyst to decrease the volatility if we can have the acceptance of.
I'm completely with you there. Volatility is huge. If a merchant accepts Bitcoin one day and then the next day it's 30% down, that's going to hammer them. I had an idea years ago where I thought about taking the top 25 fiat currencies and turning it into a kind of using the standard, the average, every day, every minute, every second, and then creating a composite currency out of that. And I thought that could work because at least merchants wouldn't. It'd be the least volatile payment.
Exactly.
So I'm sure there are companies out there doing that. I'm sure I've read about a few. And that makes a lot of sense to me. So I think that might be a step in the right direction. Obviously, governments and primarily central banks are going to be reluctant to this type of decentralized from a KYC standpoint. But the central bank digital currencies, now you're talking. Now I think that might change things. And the speed at which country after country, I'm sure you've read as much as I have, are all coming up with their strategies around how that's going to work. The US did their first transaction with Visa a few weeks ago, I think. But there's the USDC coin. I think that's just raised a chunk of change. I think I read about just this morning. So I think using traditional fiat currencies and digitalizing them might be a step in the direction towards using blockchain for crypto transactions, rather than necessarily the Bitcoins of the world.
Yeah, exactly. And Europe is as well working on a digital euro. But the main issue there's so many stakeholders involved. You see that even for a company which has one goal in mind, like Apple or Google, it's already quite difficult to develop those things. Interested to see how that further develops.
Yeah, and people have been burned by them a lot, and they've profited from it a lot. So I think there's the sentiment and that how consumers will react. And the type of consumer, I guess, that you're trying to target, who knows? The new generation, the young generation might go, yeah, it's crazy that you guys ever.
I see it all around me. People investing in cryptocurrencies that are extremely knowledgeable about them. I just don't. Yeah, for me, it's too high risk.
I've got friends who know
over traditional,
and I just invest in what they tell me to invest in.
Well, I hope your friends need to stay on point there.
Yeah, they've done me well so far, so I'm not complaining.
That's good to hear. And then looking towards the C of the ABCD cloud, which platform are you running? AWS? Or?
We are on AWS. Yep. But what we've done, which is a bit unique, perhaps even over development actually, is we've built a completely cloud agnostic or cloud independent solution.
Oh wow!
So in the sense that we can spin up instances with any cloud provider at any point in any country, which does provide some additional, I guess, resiliency. These things do go down. AWS has gone down in regions, but also as they develop different capabilities and certain tools, we're able to access those. So I think we're quite.
You can benefit from the learnings on both sides. Yeah. Of course, you have to pay an additional fee, but.
Yeah, I mean, it's not a cheap way of doing things. Yeah. But say you're a very, very large merchant, and you say, we run everything on Azure. Our preference would be, for whatever reason, because they're SLAs, because of whatever it is, because the relationship, is that actually we want to hold an instance of Apexx within Azure, within our own environment. That's something we can do in minutes. That is quite unique, I think.
Yeah. I've never heard of the company setting it up like that. I'm sure that it exists, but. Interesting way. And do you already have seen quite tangible benefits that either customers have signed with you because of this, or that you've had some learnings from having the multiple partnerships?
It's definitely helped with, you can't offer the best service unless you're considering resiliency and latency. So we have multiple environments running at any one point in time, as well as DR sites set up. So that's just something we can do so easily. We can, when it gets to peak time, and if we start maxing 200, 300, 400, or 500 transactions in a second, we can just keep scaling. Cloud's just been phenomenal for that. And from the latency standpoint, if we're going to have a large merchant in Australia, I can't be using UK servers to support that customer, or even anywhere in Asia. I have to have servers all around the world, and cloud technology has just made that so much simpler.
Yeah, imagine you have to do this on premise. Huh?
Yeah, right. I mean, that's how it was. Honestly,
and not too long ago as well.
Yeah, really not that long ago. So I think Apexx wouldn't be where it is today. We wouldn't be able to achieve our ambitions without cloud tech. So it's been huge for us.
Yeah, it's really like thinking back at dates before mobile phone, when you didn't have all the numbers on speed dial, when you didn't know the time every time of day, or I was just with my girlfriend going on a trip, and we were going to a supermarket nearby, just open Google Maps and look for it. And we were thinking about, okay, how does this work before you had Google Maps?
We did it. Yeah, especially driving. Did people just like looking at maps while they were driving, or just remember where they're going all the time? I don't know.
I remember my mother sitting with the map next to my father. Yeah. Interesting times. Glad those days are over.
Very glad those days are over.
A lot fewer domestic arguments, to put it like that.
Well, I'd say new arguments, perhaps.
Yeah, the different ones indeed.
A lot more calls to grandchildren working out, asking why their phones aren't working, why they can't open the Google app on the internet machine.
Exactly. And then to round off, your position currently is Chief Strategy Officer. What does
Yes.
What does it mean? What do you do on a daily basis?
I do a little bit of everything. I think that's why that role made a lot of sense. So look, it's critical that I spend time with our merchants to understand what they're doing today, what they need to be potentially looking at tomorrow, what their challenges are, pain points, what we could be doing to support. To really, get a bird's eye view over the business and understand from what a merchant is asking for versus where we're taking the business as a directionally from a product standpoint, from an expansion standpoint, from a partnership standpoint. So it's a role that I guess that allows me to before pre-COVID, fly around the world, meet partners, understand what's going on, see what's out there. Is there a better product? Why? And then come back to the team and go, if we did this, these are all the things we could support our merchants with. These specific merchants have showed an interest in it. Let's get our pipeline of products and integrations designed off the back of that. I'd say my core role right now is leading the expansion plans we have for the US. So I'll be making that move later this year, which we're really excited about. Obviously, it's an enormous market, and I think a very willing market to try out new technologies and with new debit schemes. Well, not relatively new, but new rules around debit structures and routing. It's the right time. And I'd say probably the last piece, which is a huge amount of my time at the moment, is the buy now pay later connect product, the solution that aggregates these buy now pay laters and provides the merchant with much richer, again, performance data of why one is outperforming another, based on is the basket value going up proportionate to the returns that they're getting, to their profitability in that market, to the is that the right one for you? Are you getting new consumers, or are they the same consumers moving away from debit cards onto expensive?
Yeah, for me, it's really interesting to see these developments. And not a lot of people are asking themselves, is this a payment solution that is fitting to my business model? If you're already in a low margin industry, then perhaps sacrificing quite a huge percentage of the revenue to a buy now pay later solution that perhaps will increase revenue but decrease profitability potentially.
Absolutely.
There's it.
Yeah, no, you're absolutely right. So I think, there are certain businesses that whilst we want share of checkout as much as we can, our independence means we don't quote unquote care which products they're taking, so long we think that they're the best ones for that customer. So we'll advise certain businesses against buy now pay later altogether if we don't think it has a place for them. I think that the variety of different solutions out there these days makes that very rare. If you have a business that's an average transaction value over £1,000, £1,500, £2,000, you've got OpenPay out there now. Can do up to $16,000 or something over 3 years. Affirm similarly is pushing into that higher ATV area. In fact, I think they've started there now. Are making their way down, if anything. So really, really exciting products. They're growing extremely quickly. So I guess in answer to your question, I'm partnering up with a lot of those guys, as you know.
Because you mentioned 16 different buy now pay later solutions that you're currently.
Yeah, that's the plan, is to have 16 by the end of this calendar year.
Yeah, that's quite significant.
It seemed like a no-brainer to me, Diederik, because the merchants all wanted, especially in fashion e-commerce, and retail is something that we really focus on, but they come with customers. They're able to push new customers to you sometimes. Sometimes they
100%. And it's extremely consumer friendly. Especially in the latest developments in the market that I've seen is I think 5 or 10 years ago, the focus was really on getting as much credit out there and then making as much money as possible. But I think that the social responsibility part has really taken off, and that people are not overextending any lines of credit anymore, or at least limiting the possibility of that. I know that Tinka, which is the buy now pay later solution formerly from Wekamp, they are putting a different time period on fashion items versus kitchen appliances, for instance, because the lifespan of these things are as well shorter. So I think you cannot pay back for more than 12 months. It has to be within the 12 months. And for other items, it can be a 3-year period. So I think those are really interesting and worthy developments that will bring the industry forward.
Yeah, I think they are, and I think that I completely agree with you. Although I think that's what I'd probably describe as self-regulation, and that's not how it's going to move forward, in my opinion. So
no, there'll be some other regulation in place.
Yeah, and I can't go into much detail on it, but we are doing a lot in the regulatory side of things. Being in the UK, we're obviously quite well positioned to be in one of the markets who are going to be regulating this a lot more aggressively than most. And I think a lot of particularly European countries will follow the FCA into how they've set the standards, and they will put a burden on the buy now pay laters, but there's also going to be a burden on the merchants. They're going to have to present them in the right way, make sure that consumers understand that it is debt that they're taking, but at the same time it's not damaging the smoothness of that customer experience. So this is something that we're sort of super focused on. But Diederik, it's very similar to how we work with any acquirers or APMs. It's how do you optimize the way that you work on? How do you present the right ones at the right time in the right way so that you're maximizing conversion and cost? And reducing.
Yeah, and having the added benefit that you don't have just one business case to study, but you can compare all the different ones of all the different merchants that your guys are working with, and really set a solid benchmark. Say, okay, for your business case within this market with these solutions, this is how you should be performing, and either you're beating the market or you need to step up your game.
You get it. This is what we're doing. That's
precisely exactly. No, I think like I said, it's super interesting. I think it will greatly benefit a lot of merchants who would extremely benefit from having a more diversified acquiring strategy, but just don't understand how to do it, or don't have the time or the manpower to do it themselves. Companies like Apexx Global will definitely play a vital role in that.
Yeah, I hope so, and I think we do to an extent already. But I mean, there's so many interesting things that you say these merchants have to consider. Just returning to your point earlier, actually, because it's got me thinking about it with the buy now pay laters and alternative payment methods. Having a local entity is a real pain for a lot of merchants, and they'll happily pay those FX markups and fees just to be able to process domestically in certain markets. And buy now pay later allows them to do that. That's just one example, but there are loads of APMs that allow for that to happen. So there might have to be maybe some loosening of the rules from card schemes to allow merchants to be more flexible to operate domestically on a global scale. We think we're at the forefront of that.
Yeah, I think so as well. All right, so enough interesting developments still on the horizon. Big move to the US coming up. Are you excited? Are you anxious? Are you nervous? Do you get any sleep?
I'm really excited. I'm really excited. I used to live in the US as a kid. I've been back and forth quite a lot. So I've been waiting for this move for some time. It's a market where there's a graveyard of startups. So I'm nervous too.
Yeah.
So we need to make
sure.
Are
you moving over there as well, or are you flying back and forth?
No, I'll be moving, so I'll be setting up camp, so to speak. But as I think we've still got some time before it's going to be clear exactly where we set up, but it's most likely going to be in New York. But I think in our industry, people are always we're working remotely anyway. Largely from a sales perspective. So I think that won't be so much of a challenge initially. It's more about taking the reputation that we've had to build over a long period of time here in Europe and bring that to the States.
Yeah, exactly. Well, I'm sure that you'll succeed. I've got great confidence in you and the team at Apexx, and I want to thank you for taking the time to do this podcast together. I've had an absolute blast and learned as well a lot. So no, it's always interesting to
any opportunity to talk about myself and my business firm.
Perfect, man. All right. Hey, and when travel gets back up again, when you're in Amsterdam, we'll grab a beer.
That sounds good to me.
All right, man. Thanks a lot.
Take care.
Bye-bye.